This video is sponsored by Skillshare. Go to skl.sh/theplainbagel4 to get a free 2-month premium trial. Gold has long been associated with money and wealth, and for good reason, given its history. In ancient Egypt, it was used in jewelry, symbolizing power, religion, and status. And after 560 BCE, it gained popularity as a currency. Even up until the 1900s, we had the gold standard, where the value of paper money issued by the government, or more specifically the central bank, was directly tied to the value of gold. We've since abandoned that mechanism, and yet many continue to treat gold as a fundamental financial asset. This despite it not being a true security, commodity, or currency. So why do people hold the shiny stuff? How can investors like you or I come to put our own money in the precious metal? And is doing such a good idea? We'll answer these questions and more on today's Plain Bagel. You don't have to look far in the world of investing to find gold enthusiasts pushing the importance of holding your money in precious metals. From those a little critical of the fiat currency system, to those running for cover really believing that the reckoning of the US dollar is upon us, there are plenty of people who believe gold stands as an attractive investment. But it's not just this crowd that covets the precious metal. Many investors continue to allocate at least some of their funds towards gold, which is strange because even though many view it as a commodity, it doesn't really fit neatly into that category. After all, commodities are primarily industrial inputs that have some output used widely in the economy, such as oil, which is used to produce fuel, or copper, which is used for electronics. Gold does have some use in electronics, but it only makes up roughly 9% of its demand. Most of its annual demand is for jewelry, as you might expect. And a sizable chunk, roughly a third, is simply for financial purposes. That is, gold is made just so that it can be held by banks and investors. Even central banks and financial institutions like the International Monetary Fund are thought to hold roughly a fifth of the world's gold supply. So why is this metal, which we don't even really use that much, such a hot holding? Well, there are a few reasons why central banks and investors alike choose to have some of their money parked in gold. Firstly, many view the metal as a store of value. That is, it's thought to be a hedge against inflation. Over time, fiat currencies like the US dollar tend to lose value as the central banks issue more of the currency. Central banks do this to stimulate the economy, but in doing so, each dollar becomes less valuable, meaning that prices within the currency will eventually go up. This is something that erodes wealth over time. Even with an annual inflation rate of just 1.8%, a dollar loses half of its value over 40 years. Gold, on the other hand, can't be infinitely added to the economy. It is a finite resource that takes money and effort to produce. So investors who believe inflation is going to rise faster than expected are often inclined to park some of their money in the metal. That way, if inflation does pick up, they can sell the gold at a later date for the new inflated price, allowing them to retain some of their wealth. Gold prices are also thought to increase faster than inflation on average, although its actual return varies drastically depending on the time frame you analyze. Over the past 30 years, for example, the average return of gold in US dollars has been roughly 4.4%, but this return was negative from 1990 to 2000 and much higher from 2000 to today. Another reason many investors may allocate some of their funds to gold is its perceived safe haven feature. A safe haven is exactly what it sounds like, something people flock to avoid danger or disaster. And in the world of investments, it represents something that isn't directly correlated to stocks. Gold prices are largely thought to move independently of stock prices, and so many investors move their money into the metal whenever they believe stock markets are going to be fluctuating or that we're going to be hit by some disaster. This way, they can remove themselves from the market during the downturn and return once the dust has settled. Finally, some people hold gold as a way of further diversifying their portfolios. Diversification, or splitting your money amongst different investments, is thought to improve the risk-return trade-off of your portfolio, providing you more return at less risk. And so gold provides another avenue through which investors can spread out their holdings amongst different baskets. So those are the key reasons why people might hold some of their money in precious metals. But you're probably wondering how people actually go about owning gold. After all, not everyone has a Scrooge McDuck vault in their basement for easy, convenient storage and security. Well, there are several ways investors can gain exposure to gold, each of which comes with its own pros and cons. Firstly, you can actually go about owning gold bullion. That is, gold in its bar, ingot, or coin form. Many institutions sell gold in this standardized form, and owning the metal can save you quite a bit on management fees. But for those lacking the proper facilities and security systems, it probably doesn't stand as a very viable or attractive option. A more common approach for investors is to buy gold mutual funds, ETFs or ETRs, exchange traded receipts. These represent securities that are directly tied to the value of a specific securely held gold deposit. Examples include the Spider Gold Trust ETF and the Royal Canadian Mint ETR, which you can actually trade in for gold or cash. Another way you can gain exposure to gold is through derivatives, specifically futures. We've discussed futures in another video, which you can check out here, but more or less, you can use the security to gain exposure to gold prices over a specific period of time, without actually needing to handle the underlying metal. These are all ways of gaining direct exposure to gold prices, where you can hopefully buy low and sell at a higher price. However, an alternative approach is to buy the common stock of a gold producer. Gold producers are mining and processing companies that actually produce the precious metal. They tend to see their stock prices move in line with gold prices, so it's a way to gain exposure there. Although they do bring added volatility to the table by adding unique risks, such as their asset quality and management team. Gold companies also require pretty hefty capital outlays and could run into production issues, but these stocks have the potential of offering higher returns than gold prices. A well-run company may continue to grow earnings even as gold prices fall. So, with all these options at your disposal, you can see that it's actually fairly easy to gain exposure to gold. But the question, of course, then becomes, well, should you? And this is where you'll find a lot of debate online. Many who are concerned about the current monetary system that we operate within will often champion gold's properties as a stable asset. But gold is actually fairly volatile. If you look at a price chart, you can see that it's not the upward gradual slope that you might expect, but rather a chart of infrequent jumps in price. Part of the reason for this is that, like it or not, gold's price is largely speculative. It's not a cash generating asset like a bond, and it's not something that can improve in quality over time, like a stock might. Yes, it is a finite resource, but we have more than enough supply to fulfill its industrial uses. And while other assets like real estate inherently gain value over time, with population growth driving the return for land, gold does not share that same property. Gold is also interesting in that it can suffer positive supply shocks when new deposits are discovered, in the same way we see oil prices take a hit whenever new reservoirs are found. Research papers have even come to challenge gold's effectiveness as an inflation hedge over time. Although again, the time frame analyzed here plays an important role in the outcome of the research. So while many believe that gold plays an important part of any investment portfolio, it is certainly not appropriate for everyone. That being said, there are of course people who have made quite a bit of money trading gold based on the price fluctuations. In the same way people have made money trading other speculative assets. Bitcoin is one that comes to mind. The point is to be aware of the risks involved with owning precious metals. Gold is not a perfect asset. And while it certainly looks pretty and remains a prominent symbol of wealth and status like it did in ancient Egypt, not all that glitters is gold. Well, in this case it is, but you get my point. Thanks for watching. If you like this video, make sure to hit the like button. And if you like what we're doing here, make sure to subscribe. Hit the bell icon if you want notifications about future videos. If you have any feedback or topics you want me to cover in a future video, leave a comment down below. For The Plain Bagel, my name is Richard Coffin. Thanks for joining me today. Hey, you like learning stuff, right? Well, you should check out Skillshare. Why? Well, first of all, they sponsor today's video, which is awesome. But also because it's a place where you can find thousands of classes teaching you different skills. Classes are offered in a video format, are segmented into short lessons, and cover a whole lot of different subjects. Want to learn the basics of drawing, video creation, and cross-stitching? Well, there are classes for those, as well as classes for professional development, like Excel for the Real World, which goes through how to use spreadsheets, a really important thing to know in the world of investing. There's also this one, Modern Money Habits, 5 Steps to Build the Life You Want, a great overview of getting on top of your finances. Now, Skillshare normally costs $10 a month for its premium membership, which gives you unlimited access. But how about I cut you a deal? If you visit skl.sh/theplainbagel4, link in the description below, you can try it out for 2 months free. A trial to see if you like it that you can cancel anytime. It's a great service with a lot to teach you, and trying it out will support the channel, showing Skillshare that I sent you their way. So whether you're looking to try something new or further advance your talents, check out Skillshare. It's got a lot to offer.